Recent economic volatility coupled with President Trump's tariff threats has some retail investors looking to shake up their portfolios or rotate out of some of those big names altogether. Joining us now to give us some more insight on how the retail trader is thinking is Steve Quirk, Robinhood Chief Brokerage Officer. So Steve, we're now 1 month into Trump's presidency. How have you seen retail investors change up their positions based on policy and what we've been hearing out of DC?
Oh, first of all, thanks for having me. Yeah, we've seen our customers immediately following the election try and take advantage of what they saw as opportunities to add to portfolio or remove some of the stocks in their portfolios based on their interpretation of what it would mean. So, obviously we've seen a pretty big bump in some names like Tesla and Nvidia and others, and in the cryptocurrency space as well. And as a result, our customers have sort of taken that ride and they're rotating. We tend to see a behavior where when they've had appreciable gains, they will take some of those gains off and then look for other names that maybe haven't participated in the rally to add to their portfolio. I think the one other element that's been most interesting is not only what they're doing, but when they're doing it. So a lot of, we give customers the ability to trade over 900 securities around the clock, 5 days a week. And a lot of this market moving news, like the tariff news, happens when the primary market is closed. So we've seen a big growth in people trading when market moving news is happening.
That's really interesting, Steve. It's Julie here. It's good to see you. So I have a couple of follow-up questions for you. On that
nice to see you.
Good to see you. On that last point, the regular markets, right? It seems like professionals are sort of shrugging off a lot of the tariff noise. It seems like they see it as noise. But what you're saying implies that there is more of a reactivity among retail traders. Is that fair to say?
It's fair. I wouldn't say there's more reactivity. What I would say is sometimes when the news first hits, there tends to be a bit of an overreaction. And like in the case of tariffs, that overreaction was an opportunity for people to add names that they thought would be attractive at levels that they didn't think they'd be able to get them. And as you pointed out, as soon as the day session came around, some of those names were back to the levels that they previously were at. So I think that tends to happen with news in general. When it first hits, everybody has to digest it. So there tends to be a little bit more anxiety with the moves that happen. And if it's an opportune time, if you're looking to add to a portfolio.
And Steve, I guess the other question I would ask about the rotation you were asking about, and again, the sort of differences you might be seeing in between retail traders and professional investors. We have seen the much discussed broadening start to actually happen in the market, right? Where we have seen, yes, big cap tech is doing okay, but kind of underperforming writ large. But then financials have been gaining some steam. Walmart until today gaining some steam. Are you seeing those kinds of similar trades amongst your users?
We are, there's still a core group of names that constitute many of the portfolios of our retail customers, but they also are adding to that and hoping and looking for that to broaden out. And it's widely anticipated that if we want to see this market continue to rally, we're going to have to see some growth in the number of names that are carrying it, if you will.
And Steve, we've seen some short selling action to kick off the year. What are you looking at when you think about some of those more meme stock-like names?
When we look at what our customers do, they typically have their core portfolio, and then they'll look at names that tend to have a little bit more volatility or become either depressed or might run up, and they'll try and take advantage of the shorter term moves. But the core of what they do is sort of that portfolio, and then this is what I'd call the things that they do around the edges. And those tend to have more exaggerated moves or be a little more volatile.